Another big shoe dropping in the financial markets today, Muni bonds. The big ETF in that space down 13% in just 2 weeks. Let's get now to CNBC's Dominic Chu for the latest. Dom, good to see you.
Scott, I mean, you mentioned 2 weeks for that big drop in that Muni bond ETF. It's 8 trading days. That's how long it took to go down 13 to 14%. If you take a look at the reasons why, there's a huge amount of sentiment shift and negativity around these municipal bonds and municipal debt overall. So much so that just in the last week, according to data from Lipper, tracks fund flows, Americans pulled, or investors at large, pulled around $12.2 billion out of municipal bond-related funds in these markets just in the last week. And that represents, by the way, the third straight week that we've seen outflows from muni bonds and those funds. If you take a look at that ETF, the MUB, this is the iShares National Muni Bond ETF. It's the biggest one out there that tracks a broad range of municipal securities. That huge move to the downside has been led because a lot of folks are questioning whether or not those muni bonds, even with their tax advantage status, remember, many bonds don't pay any local, state, or federal taxes for the income that they generate, whether or not they're still good investments. Why? There are so many headwinds out there to talk about. First of all, the economic uncertainty in America right now, but specifically with regard to whether or not state and local governments, because of the quarantine effects of the coronavirus, because of the self-containment efforts, because of the economic slowdown, will these state and local governments still be able to make good on some of these payments? There's a sentiment shift there. And there's been an extreme amount of negativity around these bonds as a result. And this is the chart that kind of illustrates the point. If you take a look at the overall portfolio for this iShares MUB ETF that tracks these muni bonds, let's say it's worth $100. Well, the ETF itself has been under so much selling pressure that the ETF trades at 94 cents on the dollar, meaning there's a huge discount for this particular fund, even to where the underlying bonds in this portfolio trade. And what that means, by the way, for a historical perspective, this fund started back in 2007. Never in the history of this fund has there been such a deep discount to net asset value, discount to NAV, Scott, as we've seen here. It just goes to show you many parts of the market under stress, but munis very much under historic stress by some measures, Scott.
News and a popular investment. Dom Chu, good to see you. Thanks for being with us tonight.